There's a lot of issues, but without finance, women cannot take their destiny in their own hands. What's needed is you need to change the institutions on the inside. You need catalysts. The leadership is really important. And ultimately, you need a holistic approach.
Welcome to Financial Inclusion Unlocked, the podcast featuring conversations with innovators, practitioners, and thought leaders who are working to unlock the potential of financial inclusion. This podcast is produced by SIJ Media and hosted by me, Jack Farron. Thanks to our Series 2 sponsor, CGAP, the innovation lab for inclusive finance that works to advance the lives of people living in poverty, especially women, through financial inclusion. In today's episode, I travel to Washington, D.C. to meet with Gayatri Murthy, the gender lead at CGAP, for a candid conversation on the next chapter of women's financial inclusion. We unpack the systemic barriers that persist beneath the surface, including gender norms embedded in institutions and the wider financial sector, challenges in gender data collection, and misaligned incentives. This is an inspiring conversation on how we can move from access to agency and what it takes to trigger a visible step change. Season 2, Episode 6 of Financial Inclusion Unlocked. Gayatri, welcome to the show. I'm really happy to have you here on Financial Inclusion Unlocked.
Yeah, happy to be here.
In the past decade, in our sector in financial inclusion, we've celebrated tens of millions of women accessing bank accounts and receiving loans. But what does the evidence say in terms of this access and then the linkage towards economic empowerment?
So by every measurement, I think we've come a long way ahead when it comes to women's financial inclusion. The numbers, the evidence is clear. The gap between men and women when it comes to owning an account has been reducing. And I think everyone working on this topic should be very proud of that. I think talking to my peers working on women and banking, we also realize what might be hidden behind these numbers. So underneath the few percentage point gap that you see globally between men and women, you notice a few things. First, a lot of countries have large remaining gaps. So there's at least 20 countries where the gap between men and women is 20 percentage points, which is a very large difference. And in those regions and in those countries, we might have to think about going beyond business as usual around accessing to accounts. But even in places where women have made that first step and have been able to enter the financial system, even get small loans, you realize in a lot of places women remain stuck. What that means is they remain at the lower end of loan amounts. Very few of them graduate up. And women don't necessarily get the kind of capital they need, especially for their businesses, for growth. And what all of that kind of adds up to is maybe we've got to the necessary first step, but now the next step looks a lot more about economic power, economic empowerment, and really benefiting through finance, not just using it.
Fantastic. Well, it's good to have you here. And we said with the team behind this podcast that this season we wanted to have an episode focused on bridging this gap.
Yeah.
So I really appreciate you taking the time and your colleagues at CGAP for helping to organise this. We're going to drill into those numbers and to really see what's happening. But before that, what drew you to first the inclusive finance space and then to this area of work?
Yeah, so I can't say it was a determined choice. I stumbled into it, but I'm really glad I did. So I was, by training, a researcher and really specializing in what it takes to research with low-income communities. And I was really enjoying that work in a small research organization in DC in my early years. But I got an opportunity to do a very large survey of financial inclusion, nationally representative, in my home country, India, when I was about 27. And I had to survey 45,000 Indians.
Wow.
And on this topic. So I think it was really the best, most thrilling life experience. And it brought to me this understanding of how important finance is as a tool when it comes to progressing and making your life in this world, no matter what part of the income bracket you're in. So that I think opened the door for me. I came to CGAP after that. And I think the track with women and banking has been parallel. It's a bit of a parallel track for me. I think growing up, I very much understood what difference having strong women in your family makes, and how much that can influence your own power and position in the world. But I think when CGAP started doing some of this work on gender norms, I think that's when it kind of truly came together for me. Because I realized even within any kind of exclusion, women face particular unique challenges. And that goes from the bottom of the pyramid to the top. And these challenges are not really that visible, especially to the banking sector, especially to corporate executives. And so that's, I think, where the passion and the kind of intersection for me came.
Amazing. So this study in India with 45,000 respondents, what were some of the key learnings?
Yeah,
That's a huge study, right?
Yeah. So I think, not surprisingly, the biggest lessons for me was how much nuance and variation there is under big national numbers. And I think that's very true for a massive country like India. But it's taught me to always look underneath big numbers, because a lot of the exclusions are hidden there. They're hidden within particular regions, particular demographics. So I think that was the biggest lesson for me. It taught me to be a manager in a way that nothing else, no MBA school would, right? So I was overseeing 500 survey interviewers, looking into enumerators, exactly. And I was trying to understand, how do you administer a survey in 22 languages?
Wow.
So I think that was just a really eye-opening experience into the breadth of the world. Yeah,
I can imagine. I'm doing a survey at the moment, and we're working in 2 languages. So I think 22 is just a different scale in terms of complexity and how you must collect the data. So then from there you moved to CGAP and started working on gender norms. But I guess one of those learnings from India about drilling down into the numbers from national level to maybe the metrics we're tracking in terms of the percentage point gap by gender is potentially not the most important metric to be looking at. So what did you find from there, and now your work with CGAP in terms of what should we be actually measuring and looking out for?
I think the biggest learning there for me is how interconnected finance has become to other aspects of one's life, especially, so first thing, digital, right? How digital finance has become in the last few decades, one could say. And so when you think about financial access, you cannot ignore mobile phone access, smartphone access, and not just access, but ability. And not just access and ability, but autonomy, especially for women. Often you find that women don't own their cell phones, or if they do, they share them, right? So how is that going to affect your interaction with finance? Heavily, one would imagine, right? The second is another variable you could think of is work and economic participation. What you want from finance is really determined by what you're doing for work in your life. Are you a caregiver? Do you work from home? Do you work in a business for your family where you don't get paid? Or are you a really ambitious entrepreneur out there? Or are you a woman trying to become a manager in a job? And so I think these kind of variables become so important to what finance should look like. And the financial system is not pre-designed to look at those things well. Yeah. And even if they do, they're designed to look at it with a model in mind. And unsurprisingly, that model is men. So when you want to think, what does a good business look like? It often looks like a business that has a certain level of ambition, right, in terms of what they imagine their returns on investment to be. It looks like a business where the activities are really focused. And it looks like a business where where the business owner has had consistent experience from the time they were in their 20s. On all of those 3 things, women's lives could look very different. Women often have a slower desire to grow because they're managing so much else. They have what you call in gender analysis, time poverty, right? Second, they may not focus on one activity because their attention has to be so split. They might do different things to cobble together a kind of business portfolio. And they may, in that way, when they show up in the system, they look less than a man as opposed to being assessed on their own terms. So I think this is a very difficult transition that will have to happen in the financial system. And that's why this chapter, access to empowerment or access to power, looks harder, looks difficult, but so necessary.
Touching on that, I read your article that you co-authored, From Access to Agency, the next chapter for women's financial inclusion, where you delved in and analysed some of the Findex 2025 data. And there was a particular quote that stood out to me that talked about access to account ownership for women is a starting point, but is by no means the finishing line. So I think much of this episode will be talking about that journey, right, from the starting point to the finishing line. So what are some of the key systemic barriers that you see along that journey?
So one that I think we've talked a lot about in our work is around data, right? And not just data that, let's research women a lot and provide this research to the banking sector. No, it's about how data works within the banking system and how does it inform how financial systems work. So typically, when you register for an account, you might provide your gender, obviously, and that shows up in your registration documents. But what a lot of people may not know is that information may not make it to the core banking systems of a bank. So when a bank's looking at who's profitable, where is business falling, where is business lagging, or where are we having issues, that analysis does not happen by gender. Or really by any demographics naturally. People have to make that attempt or special provisions to do that. And so in the absence of that, you really don't build good baselines for what women customers should look like. And to the point I was making earlier, women therefore might remain excluded even when they're in that first account owning stage or first digital loan stage. So data about women within banking systems is fairly underutilized, but also data about women often lies outside the banking system entirely. So what we know about women and banking, you think a lot about savings groups, ROSCAs, VSLAs, SACCOs, all of these kind of ways that people, but largely women, congregate in order to create, rotating savings credit kind of partnerships. That data is largely not digitized, right? Often MFIs are not digitized. Government payment schemes lie in government databases. So there's not that much connection between large troves of insight we may have on women and the banking sector. So data is a big one, and data infrastructure is a big one.
I remember going to Uganda a few years ago and seeing how these village saving and loan associations work. There's 15 to 25 members, and maybe 80% of them were female, and how they save each week and have this consistent behaviour. But then talking to the local financial institutions that might only be 20 or 30 kilometres away from them, and they see the members of those groups almost being too risky to lend to. And it's quite shocking, really. And I think it's because the data is stored in those physical ledgers that they have, that are locked inside the box with the 3 keys in terms of how the informal financial saving systems work. What would you say, and what are the big barriers to make this more interoperable between these systems and trying to connect the informal financial system to the formal so you can have this gender disaggregated data?
So there's actually a lot of good experiments happening on the ground, even particularly in sub-Saharan Africa, that are worth talking about. First of all, there are lots of organizations trying to digitize these groups at various stages. So making their operations more digitized, but making each of those women also have better access to digital tools for their businesses. That in itself won't be enough because the risk appetites of banks are very rigid. There are several organizations out there that serve women on the ground, but if we are looking for the scale that we need in the coming years, we're going to have to engage the big banks too. And I think to move them, digital data, even analyzed digital data, is not purely enough. We'll need these kind of incentives that exist out there that a lot of donors and funders can provide around guarantees, blended finance tools, subsidies, at least at the initial stages, to show banks that there's a business case. A lot of work happening nowadays is how do you design those well So you don't have moral hazards, and when the guarantee goes away, the business or the product doesn't just go poof, which happens a lot nowadays. So it's about how these things need to be structured, but essentially incentives. How do you create the right financial incentives for the bank to meet this woman's group and then continue to serve them? I think that's where the work is.
So that's one of the barriers in terms of data. What else are you seeing on the kind of systemic side?
So another challenge is around gender norms, which is not something that is typically well understood in the financial sector. So a few years ago, at CGAP, several of my colleagues began to look at this factor, because trying to understand how some of these rules, so what norms are essentially the rules by which we should live and how society may expect people to behave. And so gender norms are the rules about how women behave and how the society expects them to show up. And for a long time, this conversation was focused on the women. So gender norms mean women are less literate. Gender norms mean women don't know how to run their businesses. But actually, equally, gender norms affect the financial system itself. It affects operations of a bank. It affects how a loan agent might approach a business if it's owned by a woman, if he has the right vocabulary and comfort to talk to her and she to him. Does a credit officer or a credit underwriting officer understand these different variables that I was talking about on how women run businesses? And the more you look into that, the more you realize, and you can go very deep into this, you can go as far into inheritance laws of a country are also influenced by gender. And you realize how few women own stuff. Yeah. And you can do all the digital loans, alternate credit systems you want, but if you really want women to rise up, women need to own stuff. They need to own land, they need to own other types of assets in order to grow. And so gender norms can affect as much as all of those things, and it can really affect the success that we can have. And that's why it's very important. But it's very hard to look at gender norms.
Of course.
It's very hard for several reasons. First, they're quite specific, by country, by region, and often require people themselves to see them, right? The last thing you want is large Western organizations coming to tell you about the gender norms in your country.
I was going to ask, like how do you change that behavior? Some capacity building sessions or workshops is not necessarily going to be the trick there.
One thing I've seen is that, so there's a project at CGAP we're working on where we're trying to build coalitions around gender. So what we're doing there is we're asking really active members of the financial sector who work on women, how do we bring this entire country together on this topic, and what are the issues? And so in countries like Morocco, India, Mexico, where we're doing this, we're making the stakeholders themselves talk to each other. So can we bring the FSPs and the government in dialogue? And you'll see that the executives, especially when they're women executives who've been working in this space for a while, they know how to articulate those norms for their country well, in a way that's understood and it's not offensive.
No, we'll dive into this a little bit later and to see some initiatives or case studies that you've seen that is making progress on that. And I would love to ask you more about the coalitions as well in specific countries where you've seen progress.
Yeah.
As we continue to look at this journey, we've talked about data, gender norms, but let's look more broadly at how financial institutions, governments, or the wider sector perceive women's financial inclusion, because we were talking off air and you mentioned it's of course different dependent on the sector, particular geography within a country as well.
Yeah.
So how do you look at that in terms of segmenting?
It's going to look in this podcast like I'm asking for a lot, like high systems level view and then going down to segments. But I think there's great expertise on both sides of that spectrum. So on the side that you just mentioned, there's this idea that women are a segment unto themselves. And while that's useful in the beginning, it doesn't really help that much, because women are not a monolith at all, as you know. And large groups of women can act very differently. And CGAP's work has focused a lot on bringing bringing to the forefront what some of these key segments are. So women in rural areas working on agriculture and related livelihoods are a particular kind of group where you might have very low access to high-end digital technologies, and then the financial services need to be a lot more phygital, as they say, a combination of digital tools with kind of physical access. At the same time, understanding that will not help you to serve a woman in a big city who's running a business selling wedding gowns to high-income people, but herself might still lack finance to grow from a business serving, 100 clients to 1,000 clients. There's lots of gaps there too, and those gaps are different. That's not where you need the phygital stuff. That's where you need really sophisticated tools to understand her business within the banking system. So these segments look really different, and there are various types of women in jobs is another whole different thing, right? Sometimes the conversation gets too focused on credit, but women in jobs trying to rise up, trying to not fall behind when they have to take maternity leave. What do we do there? So all these different kinds of segments are also important to understand.
No, thanks for setting the scene. And there's obviously a lot to discuss and unpack in such a short podcast. I feel like we could have a mini series on this topic. So let's head back to the data point. You recently worked on a working paper called The Next Chapter for Women's Financial Inclusion, Moving Towards a Visible Step Change. And you talked about fragmented efforts in terms of data. If you're a bank and you can't see gender in its own data, then how do you actually see that it's a problem?
Exactly. And so the way people have tried to solve this is trying to convince a few banks to do small experiments that, if publicly shared, move the needle, right? So you have various funders like the IFC and the BII who will tell their investees that, hey, there's a certain tranche of money that we can put into your business, but it requires you to do gender disaggregated data on your portfolio. Yep. And so that's my example of where incentive meets, then new ways of working. And so when you do that, you realize all kinds of things. For instance, an MFI may say, hey, 95% of my clients are women. What are you going to tell me about gender disaggregated data? But my colleagues at the IFC have found that, sure, you're serving them and overwhelmingly women, but there's a lot of business you're leaving on the table because you don't understand where the customer experience is going wrong, where they're kind of leaving. And other banks saying, we serve everybody who's eligible and we serve micro entrepreneurs. But when you do the analysis, you realize only 16% of their customers are women, but all of them have a higher repayment rate than men. Now, these kind of insights can be very helpful for an institution to then be able to see what they've been missing out on. But whether that becomes something that can be scaled is harder, because you need to get some very big banks to do this. You need to get central banks to ask for this data. So there's work CGAP has been doing on regulators asking banks to submit this data. And, the last thing you want to do is ask banks to do more work for the regulator. But these regulators can be that change maker, that catalyst that could, change the systems. And this is happening in certain parts of the world, but not enough.
So Gayatri, for institutions that are able to pull this data out and really see what's going on, what are some of the positive outcomes that you've seen in terms of how they can innovate in their product development and service delivery?
So almost always you need, I think, good leaders to be willing to take some chances. I think that's 100% necessary for some of this innovation to happen. So what I've noticed at a very tactical end is, organizations looking at where women are and changing how they deliver their services. So instead of fully smartphone, can we do kiosks in grocery stores where women are more present and can kind of join services up? So this is like the Time Bank in South Africa is a really good example of innovation like that. There's also innovation on how do you deepen your relationships with women borrowers. So there's a organization in India where the leader is a woman, and therefore, when she tried out women-focused products, she realized that women don't just need literacy or business professional training, which is often said out there. What they need is better networks and better mentors, and no better mentors than other women themselves. These are great role models because women's journeys look different, those challenges that they'll have to overcome. So why not have quarterly networking meetings of all your borrowers and bring them together and see if they'll each bring a new friend along who could be future customers. So good for business and good for the customer, right? And there's other examples like that. This is not a pure banking example, but there's an employer, Tata Electricals in South India, who committed to employing a majority of their factory workers as women, so 80%. And what they realized is many of these women were first-time workers, so they hadn't worked ever, and they were living away from their family in order to go to this factory and were provided housing and everything. In sending money back home, these women became what you might call financially included. The first step was done. But what they also started to notice, and they had sociologists on their team, this is the difference some of these things can make. And they realized that in sending money home, often women were paying off home loans that their family had taken. And because they became so key in their family's financial trajectory, their position in the family changed. They became more able to decide things and become leaders instead of in the background. However, you could also see it in another way, which is they're still working for their family. So whether their own financial life could start besides this sending back money home remains to be seen. But these are the kinds of insights I think we need to be able to understand when serving women.
It's super interesting, right, with the data and the insights of now what you can see with the full picture. But I guess it still requires the leaders and the execs in those institutions, like some of the case studies you mentioned from Time Bank in South Africa, to really want to do this and to really push it forward. And I guess that comes to the gender norms issue that we talked about and some of these sector-specific and geographical-specific cultural challenges. We touched briefly in our discussion today about the coalitions that CGAP has been building that are in the country, bringing women together, that are working on this topic. I want to hear more about that and what's worked and what maybe hasn't worked as well.
So when you think about the word coalitions, which is, can be an incredibly boring word too, but when you think of that word, you think about these large meetings where people come together and talk a lot and then go nowhere. So certainly as CGAP going into this project, we wanted to see good examples of really collaborative work that is transformational, especially on gender. And the one thing you mentioned about the execs and the leaders is how important influencers are for that change. And I don't mean influencers in the social media sense, but really transformative leadership is key, especially when it comes to changing how a country or a region thinks about people. You need some strong voices in the system. So we're doing these experiments in 3 countries, Mexico, Morocco, and India. And they couldn't be different from each other.
Sure. But big markets as well.
Big markets, and at very different points in their financial inclusion and women inclusion story. So in a country like Morocco is one of the places where the gender gap between men and women is very large, and women's labor force participation is very low. But you have there a very strong and determined central bank and Ministry of Finance. So there we're working with the government in order to create this working group, and the government is in the driver's seat over there. What you see there is the convening power leaders can bring, that they can bring everybody to the table. In India, the problem is very different. One way financial inclusion is done, 100% access, men, women, lots of work with savings groups, lots of very big MFI market. We're really taking the opposite approach. To a large extent, it's the financial system itself and the really vocal leaders working on banking for women who want to then push the government to make a change on some really transformative stuff. So how do you make sure women graduate past small loans into bigger enterprise productivity loans? How do you make sure that not just women or individuals are resilient to climate change, but how do you make firms resilient? How do you make women-owned firms resilient? So there the problems start to become much more about larger, deeper inclusion changes and much more led by financial institutions and civil society. And then in Mexico, it's a bit of both. They've done a lot of innovation on women's focused products. There's a very robust gender disaggregated data practice. So the regulator asks for it, and it is often a key tool. Their diagnosis is that their institutions, the change management that is required to make institutions women-centric is the main problem. So there, it's very much about how should your boards look like? How should women leaders be empowered? How should loan agents change the way they work? What's the training you need to give them? So it's very tactical, very like business change management focus. And so you realize there's no one solution to how you solve women's financial inclusion, that each country has to decide what its journey is going to be and what its challenge will be to solve.
Yeah, but it's nice about how the coalitions are led by local institutions, government, influencers, as you call them, locally, that they understand the context of that market and they can drive the change. In something like the business change management you mentioned in Mexico, how does that actually practically work?
So, it started with all these institutions nominating a middle manager in their organization who was the gender lead to show up in these community of practice meetings. But what we've done there through certain experts and certain course material is to force them to involve people in the organizations in their homework. So when they come back for various courses and seminars, that it's very action-oriented. They have to bring the product manager in, and at other times they have to create pitches for how, to talk to the CEO. So it's a lot. You realize that the work is not simply product innovation. It's not simply global research on women. None of these are enough, right? What's needed is you need to change institutions on the inside. You need catalysts or change makers, that the leadership is really important. And ultimately, you need a holistic approach. So it goes beyond just simply looking at numbers related to transaction efficiency. You need to look at what makes a woman's business look good. So I think that's what my learning has been across the world, that realizing these different pathways and realizing how change happens.
And I guess you need to bring all actors and stakeholders to the table. And this type of initiative is, as you mentioned, it's not product specific or a specific program. Changing institutions from the inside, it takes a lot of work and funding. So when you look at the global development outlook right now, what is your message about funders that need to come to the table and actually see that this is actually an integral piece of the puzzle?
Yeah, that's a timely question and certainly something that's very pertinent right now. I think what happens is sometimes when we're trying to solve big problems, all of us, I count CGAP within that, we all end up finding our own little formulas for change. So women's financial inclusion or women's exclusion is such a big topic that each one of us as funders picks our own part of it. But what ends up happening is you have 17 highways going and they're all trying to get to the same destination, but there's not a lot of coordination and convergence. And that kind of work, it looks very boring because you have to bring people together, you have to align incentives. But I think in this era where money is scarce and we're really looking at the world, global orders changing, some countries becoming more powerful, the relevance of Western-focused insight is changing. So how do you ensure the work we do has, bang for buck? Like how do we make sure it's all adding up to something? So I think CGAP's message on this to funders is to really focus on this collaborative country platform approach, because gender is not necessarily a global topic. It is quite a bit a national issue.
So that's a message for funders, donors, but obviously at the local regulator level, yes, there's a lot of work to be done. What would you say to them if you were talking to me and I was representing a central bank?
My message there is for lots of countries out there, there are high ambitions for economic growth to reach developed country status. You see a lot of energy in G20, BRICS, etc. None of these changes will be possible without women participating in those economies, not just at the baseline, but throughout, and women growing. And you cannot really have women growing unless they are supported in some very key ways. And finance is a very key pillar of support. I would say besides that, there's care and transport and safety. There's a lot of issues, but without finance, women cannot take their destiny in their own hands. And certainly, women cannot circumvent norms unless they are empowered through financial tools. And so my message to regulators is to talk more to their Ministry of Social Development or Ministry of Entrepreneurship, and for a lot of collaboration to happen across governments so that they can look at this issue holistically, marrying digital inclusion, financial inclusion, and economic participation, because that will be powerful.
And at the financial institution level, for commercial banks, for MFIs, for fintechs, there's a lot that we've discussed today that they could do. Some of those are, maybe incredibly difficult to actually implement in their organizations. What would you say is one thing that they could listen to today and act upon?
If they can listen more to the women managers in their organizations and try to understand insights from them, I think attempting in any way some form of analysis of their data by gender. And I think believing in the capabilities of women and understanding that as financial institutions, we may have blind spots that not only is exclusionary, but actually is leaving business on the table. So we're not just doing wrong by society, we're actually missing out on a win-win here and trying to find value in their women customers.
Gayatri, thanks so much for coming on the show. It's been a real delight to have you and to host this dialogue. I think it's a moving discussion. I think in the podcast we'll need to continue talking about this topic over the coming years. For our listeners that want to learn more about your work, where would you advise them to look at? Is there any publications or recent articles that you authored?
So I think CGAP's work on gender norms is something I'm very proud of. My colleagues who've done this work have really added to the insight that we've had on women's financial inclusion. So I would urge readers to look into that and what it really means. It's very tactical work, and it really marries a bit of a social analysis view, but then really how should companies really bring that into their product and operations it's very useful. So I would say the work I was mentioning on the coalition in Mexico, we've actually, with the government, with the World Bank, have come out with what those guidelines look like. So what does change management look like? So for the change management nerds out there in the financial institutions that listen to you, I would say that's a great resource as well.
Amazing. Gayatri, thanks for coming on the show.
Thank you so much.
If you enjoyed this episode, please make sure to subscribe or follow Financial Inclusion Unlocked wherever you're listening, whether that's Apple Podcasts, Spotify, or any other podcast app. That way, you won't miss any of our remaining episodes we have coming your way in this season. You can also connect with us on LinkedIn. Just search for Financial Inclusion Unlocked to join the conversation. This podcast is produced by SIJ Media, and Series 2 is proudly sponsored by CGAP. For more information on their work, check out the website at cgap.org. That's cgap.org. I'm Jack Farron, and I'll see you next week.